Okay, so I'm here with Stacy from Bright Mortgage, and we're out here another episode of Walk and Talk Wednesdays. So Stacy, tell the neighbors what you do and how long you've been in business for and how you can solve people's problems.
Well, I'm a mortgage broker, residential mortgage lending. I've been in the industry 21 years now, so quite a while.
Yeah.
In about 2023, I opened my own mortgage brokerage. Right as rates started to climb, we had to break away from the traditional banks just because costs were going up, rates were going up, and we needed to find a way to be more competitive, which is why we opened our own brokerage.
Okay.
Yeah.
And, you know, if I was looking to buy a home, let's say I'm a first-time buyer, I know there are lots of programs out there, but maybe you can share what you think would be best for them.
Well, obviously, everybody's situation is going to be a little bit different. It depends on what their qualifications look like. So it's really hard to identify a specific program until we know what we're working with. But making sure you do work with a broker or somebody who has all the different options is going to be a valuable resource. Start looking sooner than later. I think that's one of the mistakes that we have now is that a lot of buyers start looking at houses before they've actually researched their financing options to find out what they qualify for, what payments are going to look like, just to make sure that they're in budget.
So let's say, I'll give you this case scenario.
Okay.
All right, so I'm kind of like a fresh, new grad. I got a, decent paying job. You start a new career, right?
Yeah.
But I think a lot of people fall in the trap of, just renting for years and years and years.
Yeah.
What do you think about that?
Well, I think if you're exploring the idea or considering, have the conversation, see what it looks like to purchase versus renting, because obviously when you rent, all you're doing is making your landlord's mortgage payments. You're not really building your own equity and building a future for yourself. But obviously, you have to feel good about it. It can't be too much of a stress to make sure you can afford it and maintain the payments. Not only that, maintain the property and feel good about it.
Yeah, I definitely agree. It's just, it's frustrating because I know some people, personally and now and obviously over the years that they just fall in that trap, and it's like, man, you can't play the real estate game if you don't have real estate pieces to play with.
Sure,
right?
Yeah.
But they don't understand that you got to start small.
You do.
You have to start with a small piece, then you can upgrade, right?
Yeah,
that's the game.
The property ladder, which is that's what we commonly refer to it in our industry.
Well, there you go.
You get your starter home, you live in it for a few years, you take the equity from that home, you flip it into your next home to help keep that next home payment more manageable, maybe to buy down your interest rate. But you do have to start somewhere. You can't start with the end, with the mansion or the dream home always. In a few cases that works out, but not all the time.
Yeah, I think a lot of people get blinded by that, like the FOMO and also keeping up with the Joneses. Is like, do what's best for your situation. Help protect yourself, your financial assets in the future.
Yeah.
Help your family grow financially, right? And just, it would be the smarter move.
Well,
so maybe you don't get like a 4-bedroom, 3-bath home that's whatever, 3,000 square feet. Maybe you start sometimes with like a townhouse.
Easy.
Right?
Sexy sells, and what you see on Instagram is those houses. That's what makes everybody want those particular style houses, not the reality or the practicality of what works for you.
Yeah. Stacy's actually the person, he was our lender when we moved here from San Diego, so he's the one who helped us out. I have firsthand customer service experience with this gentleman, and it was nothing but 5 stars. So.
How many years ago?
Gosh, what, 2020?
Oh, wow. Okay, yeah.
Yeah. I still remember talking to you on the phone in San Diego while I was packing up my stuff.
Oh, man.
Yeah, going through all that, but anyways.
Well, one of the things we really like to do is provide a lot of education and try to make it understandable for somebody who's never been through the process. Try to simplify some of the terminologies, try to simplify some of the processes that you have to go through to qualify, but just try to make sure it's user-friendly.
Let's just say we have a veteran.
Yeah.
What could they do to help themselves? Actually, let's go this way.
So, a veteran buyer.
Yeah.
Well, obviously they have one of the best loan programs out in the market for veterans. Your VA home loan is a phenomenal tool with the best interest rates and obviously 0 down payment. So those two things hands down are the best two benefits of a VA loan. Beyond that, flexibility on underwriting. So sometimes some programs allow you to have a higher debt load than some of the other programs. So I'm kind of diving into the details, but just imagine a bigger box to fit into for qualifying. It's probably one of the biggest boxes you can fit into and still qualify for a home loan. where your FHA is just a little bit smaller box, and then conventional is probably one of your smallest boxes to fit into if you want to qualify for a home loan.
Okay, so Stacy, you just explained the VA loan, which is awesome. What other types of loans are there for buyers?
Well, bulk of your financing is going to be your conventional mortgage, your FHA mortgage, followed by your VA mortgage. So those are probably going to combine, take up at least 95% of the mortgages out there. And then beyond that, you do have some of your, what they call portfolio loan programs, whether that means a bank statement loan or a self-employed borrower loan where they just look at your deposits into your account. Those are called portfolio loans. Those don't have to follow traditional guidelines. Those are going to be programs that a bank says, listen, we'll lend on this if you meet these certain parameters. They don't have to follow all the other guidelines. So those are popular, but not as popular as the VA, FHA, VA, or conventional.
Okay.
Excuse me.
Did you just inhale any of those?
No, I think you got them all. I might have got one or two.
Sorry about that. Some gnats in the air.
Yeah.
And what types of loans are you seeing more now in this type of market?
You know, conventional and FHA, those are going to be the primary clients that I'm seeing a majority of the time, and it's probably, for me, for my clientele, it just seems to be 70% probably conventional, 30% would be FHA, between those two, and then you obviously have your VA, but I didn't count that in that factor. And so, you know, with the FHA loan, you can still buy a home. The average price point or the average mortgage amount, I believe, is somewhere around $400,000, which fits well into an FHA loan program. And it gives the most flexibility outside of a VA loan. So if you are just coming out of college, just getting your feet on the ground, the FHA loan is going to give you the most flexibility with a relatively small down payment of 3.5%. But, you know, if you have student loan debt or you have other obligations, you're going to still be able to qualify for an FHA loan in most cases.
Random question.
Yeah.
How do you feel about this?
The 50-year, 60-year?
Whatever it is, yeah. I mean, how do you feel about that?
I haven't been a proponent of it. I think there's some people out there that say, hey, it's a solution, it's a tool to help get you into home ownership. Well, what's important about being a homeowner if you're not going to benefit from the equity growth and all of those other things? So you own it, but what do you really own? You're going to be paying the bank way more interest over the life of the loan. Your principal balance, like the pay down balance, if we did the calculations, it's something like 25 years to pay down your balance to the same stage as what it would be within 5 years or something.
That's insane, right?
On a mortgage. It's just so much more interest. And I haven't looked at the calculations in the last 4 or 5 months, but I just couldn't get on board. I don't think that that's a great solution to get people into homes.
I don't agree with that. Yeah. I understand, but I don't understand, if that makes sense. Like, I know what they're trying to do, but also no.
It's not the right solution. The right solution is finding a way to get rates down to a more affordable range. And I don't know what that needs to look like to make that happen, but getting rates down, whether that means, you know, allowing sellers to give more concessions. I don't know if that's the right answer, but it's something that could help. Right now, there's limitations on the amount of concessions a seller can typically give, depending on the loan program. But at the end of the day, that might be a helpful solution. The longer terms, I don't see as the right solution.
How do you feel about ARM, adjustable rate mortgage, as opposed to conventional, you know, whatever, 15, 30?
Well, in the last few years, the ARM rates, interest rates have not been as advantageous as they used to be. So you used to go into an ARM loan and the interest rate would be significantly lower than the 30-year fixed. And now what you see most of the time is that rate might be 0.25%, might be 0.3%, maybe even up to 0.5% lower. But to me, that risk exceeds the benefit of having a long-term security in a fixed rate loan. I think if you are going to do an ARM product, you have to have a really definitive plan that you have an exit strategy.
Yeah. Otherwise you get caught.
Yeah.
You get caught and it's
absolutely.
Like, oh no, this is a bad idea, right?
Yeah. And so those rates just aren't as good as they used to be, taking away a lot of the benefit of the program and then the added layer of risk.
So thank you for sharing that, but I just want to take a look at this, audience. If you haven't already, passed by our brand new library, which is awesome. Absolutely beautiful. This was completed a few months ago, so they put this up pretty quickly. Wow,
this whole area is amazing.
Yeah, it's pretty cool. It looks really pretty at night with the string lights
I bet,
and whatnot. We're just going to continue on down this way. All right, Stacy, so what are some of the most common mistakes you see home buyers do?
Well, we may have alluded to this earlier, but I think going out, falling in love, looking at homes before they know their finances and what they qualify for, I think it's really important to maybe reverse that. Although we know the mortgage process is not sexy, finding a house is sexy and finding the dream home is. But it is important to go talk to your lender, get pre-approved, find out what your payments are going to look like, make sure they fall in budget. And that way you can make sure you're looking at the right price point home even before you start your search.
For sure.
So your expectations are set properly.
It's like shopping for a Ferrari, but you can only afford, Honda Civic or something,
Sure,
right?
sure, exactly.
It's a little crushing to the dreams.
It really is, it really is, especially in today's world.
So get pre-approved. That is the first step.
100%. Yeah.
Okay, so what's a tip that you would give to a home buyer when they're out shopping for properties with their realtor?
Make sure you and your realtor are, talking about negotiation strategies on every single offer. One thing I think that comes to mind for most buyers, especially if they're new to the market, is making sure they get the best possible price for the home. Absolutely, I agree. I know that that's important, but maybe think about it this way: a $10,000 price reduction on that home is probably going to save them $60 a month on their mortgage payment. But getting a $10,000 credit towards closing cost or to buy down your interest rate easily is going to save them maybe $175 to $200 a month, just depending on the price point of home.
That's a huge difference, right?
It's massive. So way more significant savings on a monthly basis than a $10,000 price reduction. Better interest rate also leaves you less interest paid over the life of the loan, which means you're still doing in a better position, even though you might have paid a little more for the home.
Yeah, but long term, you're going to have more money in your pocket.
That's right. Absolutely. Oh, Ian, one thing I did forget to mention is that we want to offer a credit towards the cost of an appraisal, whether you're refinancing or purchasing a home. We know that there's a lot of cost tied to that process. The one thing we ask is that you reference Realtor Dad here, Ian Tolenada. So again, Realtor Dad will get you a credit towards your appraisal, whether you're purchasing or refinancing.
I love that. It's going to help a lot of people out right there.
Definitely try to limit any of that overhead.
That's very generous of you, man. Thank you for that.
You got it.
Stacy, I want to thank you for coming out, brother.
Yeah, this has been awesome.
Thanks for doing the walk and talk Wednesday with me.
I like this strategy. This thing is really cool, and it actually gets everybody to see what's going on out here.
Yeah, I mean, really dude, cool. Why would I not want to highlight this beautiful place where I live?
It is amazing.
There's a reason why we chose to live here, right?
Yeah, in a few more months, you're gonna have to do it like at 4 in the morning.
Yeah, we're gonna have to figure out. We're gonna mitigate the issues with the heat here, because I don't want to have be doing CPR on somebody out here. I left the medical field, you know what I'm saying? So if someone wanted to get a hold of you, how could they do that? brightmortgage.com. That's the easiest way to find us on the web, but obviously we're on Instagram. Phone number 480-450-5625. Get a hold of Stacy if you're looking to potentially buy a home. Refer your friends and family to him as well. He's a great dude. He helped us, so I have firsthand customer service experience. Thank you guys for watching, and we'll see you in the next episode. Take care.